Hey guys, Toby Mathis here, and today we're going to talk about a scam that's been going on. It actually started decades ago. There's these pure trust, constitutional trust, whatever you want to talk about it. There's always this, you don't have to pay tax if you use this special type of trust thing. And right now it's it's the 643 trust that's misinterpreting a 26 USC 643 with regards to distributable net income. They're misinterpreting that statute. They're trying to say if you apply capital gains to corpus, that somehow that's not taxable income to the trust. They're doing all sorts of crazy stuff that's getting people in a lot of trouble. In fact, there's promoters that have been prosecuted now. We actually had a client who got taken by about 30 grand from one of these folks. And we did a whistleblower complaint, and a year later, the guy is facing serious jail time. They actually are getting prosecuted, and thankfully, it's one of our clients said, "Hey, enough of this nonsense." Brought it to us, brought it to me. I reviewed it. I could see that it was a scam pretty early on. Wrote a bunch of letters, and then had the clients do their complaint when we couldn't get a response from these attorneys and CPAs that were playing this. So we're seeing this over and over again. We're going to talk about what the IRS is doing about it and how you can spot it. So first off, if you have somebody who comes up to you and says, "Hey, here's this cool trust thing. The rich have been using it for all these years. This is how they avoid the payment of taxes." And they start calling this non-grantor spendthrift trust. It's kind of the earmarks. I'll actually use the IRS language, and I'll show you their what they're actually, they just did a memorandum on it, Chief Counsel's Office, but a non-grantor, irrevocable, complex, discretionary spendthrift trust, copyrighted, that's a big earmark. Or again, if they start talking about how the wealthy use it to never pay tax, and it sounds just plausible, like, wow, like maybe the tax isn't completely avoided, but maybe you pay it in the future, that it starts to sound like that could possibly be the case. And then you're in, and then they're going to say, "Hey, this is a copyrighted document." Sometimes there's copyright written right on the bottom, as though that actually means something. But what we really care about is what the IRS is going to do about it. So I'm going to show you the memorandum that the IRS issued from chief counsels, and it's very unequivocal. Like, we can get right down to it. And this is pretty recent, August 9th. You can see that. But what are they talking about? Non-grantor, irrevocable, complex, spendthrift trusts. What is this talking about? This memorandum here is, look at this, marketed a trust structure which mistakenly, whenever you see that, the IRS is coming after that promoter, and that promoter is going to go away. Like, usually they're prosecuted. The penalties are, I think it's 50% of the revenue that they generated, and they can't take any expenses, things like that. It's like these guys get put out, and it's 643. There's a bunch of them on the internet. You go on YouTube right now and just type in 463 avoid tax, blah, blah, blah. There's these things called extraordinary dividends or applying the capital gains to corpus, and they don't understand trust accounting. So like trust accounting, when they use the term income, there's different meanings for that income. Like DNI is distributable net income. When you see income underneath that section, it's only talking about money that gets distributed and taxed to a beneficiary, not to the trust, right? So when they start talking about these provisions, they completely misconstrue what it's about. So for example, in this area, 643 is specifically whether something is considered distributable net income. If it's not considered distributable net income, it means the trust does not get a deduction for that amount, and it is taxed to the trust. The trust gets taxed under, I think it's 641. So like, it doesn't mean that it's not taxable as income to the trust, even if it's not taxable as income to the beneficiary. I hope that makes sense. In other words, what the IRS is worried about and what the tax code is worried about when we have these provisions is that somebody pays tax on it. The trust either pays tax or the individual beneficiary, but not both. Most of the time, if you have control over the trust, you can change its terms, or you can control who the beneficiaries are, or maybe it's a spouse or a brother or a father or somebody that's in a position of power. Like, "Hey, I gave this position to the trustee." It's going to be considered a grantor trust regardless. In other words, you control the strings, you could change things. And the promoters, by the way, always market this like, "See, you still have control." If you have control under this, the chances are, unless you're willing to give up complete control to a third party, it's a grantor trust, which means it's ignored. The IRS says, nope, it's a grantor trust, it's taxed to you. They don't even address that in this actual memorandum. They just address whether 643 is actually does what they say it. And believe it or not, it's no, right? They're not. It's not interpreted correctly by these promoters. So when you see the term promoter, you know they're getting their hatchets out and ready to go after that person. So they say, for simplicity, this memorandum is limited to rebutting the promoter's misinterpretation of 643. There you go. The IRS just said, whoever's telling you that you don't have to pay tax by applying this extraordinary dividend or applying these capital gains to corpus, they're misinterpreting it. This is not the way it works. And so they kind of go through a bunch of different things, but let me just give you the structure. This will let you know whether you guys are in the firing line. So if you're out there and you've had this pitched to you, you've put this into place, read this paragraph. So the structure is being promoted by a combination of attorneys, accountants, enrolled agents, and unlicensed tax advisors. The promotional materials consist primarily of a series of presentations, and they basically point out social media, informational websites, short documents, and short legal opinions. The materials state that the trust is being offered complies with Scott's on Trust, the Uniform Trust Code, a restatement of Trust Third, and the Code. Some materials specifically note that this is a Section 643 compliant trust. The materials describe the trust by its purported characteristics, typically a combination of the terms non-grantor, irrevocable, discretionary, complex, Section 643, and spendthrift. And some of these things you'll actually see, they point out they're copyrighted. I just went through this with one of my clients, and they literally had a copyright on it. It was just absolute garbage, and it's going to get everybody in trouble. It would get the client in trouble if they actually implemented it. Thank God they didn't. They got a second opinion quick, and we were able to point it out that no, this does not do. In many variations, the promotional materials refer to the trust structures: non-grantor, irrevocable, complex, discretionary, spendthrift trust. That's a mouthful, right? I won't get into too much of all this. Like, you could read it yourself. I'll put this. I mean, you could actually just read this now, but you could also go get the link. I'll give you that what it is. I'll go all the way up to the beginning. It's cited as AM 23 or 2023-006. It's like you could just go type that in and you'll get the opinion. You could download it, read it yourself. All right, let's go through this though real quick, because I want to get to the part where they completely screw up and they misconstrue the code, which for those of us who make our living in this area, you're like, come on, man. Like, don't be that dense. There's no basis. Like, this is not even close. Right. So the promotional materials claim that none of the income generated by the trust is subject to current federal income tax if the trustee allocates such income to corpus and refrains from making distributions to the beneficiaries. The legal basis is this 643. To support the assertion that this is the case, they quote 643 that says capital gains and losses underneath this code provision 643A3. Gains from the sale and exchange of capital assets shall be excluded to the extent such gains are allocated to corpus and not paid credit or required to be distributed to any beneficiary. Then they go through and say, hey, next, they say there's this idea of an extraordinary dividend. And again, if a fiduciary has the sole and absolute authority to designate something as extraordinary dividends or taxable stock dividends, and that designation is paid to the corpus and not subject to distribution, that it is not income. So I've had them actually pitch my clients that run S Corps, saying, put that S Corp in this trust, and now we just call it an extraordinary dividend. You don't have to pay tax. Again, hogwash. It's not how it works. The trust is still liable for the tax on it. And the IRS still has the argument that it's a grantor trust, so we ignore the whole thing. They don't even have to get that far because they're like, it's not even an extraordinary dividend. It's not non-taxable. It's not considered distributable net income, which means it's not a deduction to the trust, which means the trust pays tax on it. But they can't think that far because they're just so enamored by this idea that, look, it says right here it's not taxable. Underneath that small little sliver of distributable net income. They use these. I've actually done this. I've actually had, there was a group here in Vegas that I think Platinum or some silly group, and I said, "Hey, you're pitching this thing. I don't think it does what you say, but could you give me any legal opinions?" And they said, "Oh yeah, we have an attorney who, and we have a private letter ruling that which by the way aren't any, they don't have any effect for precedent." But they said there was a Supreme Court decision, but then nobody knew the code provision. And they said there was a lawyer that they talked to. And then I talked to the lawyer who could not provide me said opinion. He threw some site out that was completely irrelevant to what they were talking about. And then he's saying, well, these are, they're misconstruing what I said. So now everybody's pointing at everybody else. And I'm like, this is absolute garbage. You're going to get everybody thrown in jail. Why are you doing this? So anyway, so they go through all this. 641, the IRS goes through 643. They go through each provision. This isn't what's important. What's the important part is what the IRS says about those provisions. So here's the analysis. This is what you really this is all you need to know. Contrary to the claims of promoters, the trust will recognize income on its capital gains and dividends, except to the extent those amounts are distributed or deemed to be distributed to beneficiaries. That's exactly how I interpret 643. It's distributable net income. It's exactly how any competent attorney or accountant is going to interpret it. And it is how the IRS interprets it. The promotional materials support their claims about tax benefits of their structures by reading subsection 643 out of context. We've been saying this for years, doing battle with these guys. The materials do not address 641, which provides the basic rule that trust taxable income is computed as it is for individuals with certain modification. In other words, it's not a deduction to the trust when we have distributable net income that's not included as income, right? But that it's not a deduction, which means the trust pays tax on the income. That's all that means. And what they're doing is twisting it into something else. So basically, the IRS basically says what I just said. Instead, the materials look to 643 for guidance as the definition of taxable income. And so in so doing, the materials failed to consider the beginning of that section, which expressly states that the section defines distributable net income rather than taxable income. Like, again, just because something is not distributable net income does not mean that it is not income when you're computing it for purposes of whether the trust pays tax. Now, this, again, the IRS has other arguments. They could sham the whole thing, tax-motivated transaction, substance over form, right? They could say it's a grantor trust, which this is. The ones I've seen are all grantor trusts, which means it's taxable to the individual. There's not even a tax to the trust. This is a moot point. All of these things are silly. They're spurious. They're misinterpreting the tax code. You're taxed on the income, regardless of whether there's an income tax form for the trust. And then they also miss it here. So the IRS is basically saying you're dead in the water on, even if what we assume, like even if what you say is true, this is a non-grantor trust. Even if we say that this is a non-grantor trust and that you didn't step on any of the landmines that involve grantor trust status, even if we assume what you're saying is true, you still screwed up because you misconstrued distributable net income. They spell it out here in great detail. And then here's the recommendation. In each case, using this structure as a threshold matter, the trust income tax return should be examined to ensure that the trust is reporting all its taxable income, including capital gains and any income that is distributed or described as an extraordinary dividend. And B, ensure the trust is disallowed any deduction claimed with respect to such income solely because the trustee decides in good faith that is allocated such income. Like, they are toast. They are literally tearing these things to shreds. You're going to see prosecutions. We've already seen some. You're going to see people, what they're going to do is go after the promoters, say, let me see everybody that you signed up, and they're going to cut through them like a hot knife through butter. And the penalties that promoter is going to be hitting with, there's not going to be any money for you to get when you get nailed, but they're going to be facing criminal penalties and that 50% promoter penalty with no deduction for any of their expenses. So what would I tell you if you are somebody out there and you've been pitched this? Let the IRS know, do a whistleblower. If you actually bought this and you want to try to get your money back, by all means, reach out to another competent attorney and make sure that somebody is undoing this garbage that they had you do. If you've been relying on this for a few years, you're not going to like the consequences, but you're better off being first on the bus and not having CID show up at your doorstep, which I've had them do on folks that were in these situations. You want them to show up on your doorstep with your lawyer's letters to the promoter saying this is hogwash and we're undoing everything that we do so that you don't get prosecuted. What you don't want is to be trying to explain why you listened to some garbage promoter and did a bunch of criminal acts. That's not going to be an excuse for it. So if that is you, take action now, like as in yesterday, and make sure that you undo this stuff. If you know of anybody that has been pitched this garbage, please reach out, share this video with them. And if you're one of those crazy people out there that wants to try to argue that this is actually the case, go ahead and put it in comments. I would love to see your analysis. And after you've read the IRS's opinion on it, because at the end of the day, you could be arguing that all day long that you're right, but you're what's called dead right, because you're going to be in jail and you're going to have your assets seized while you're sitting there arguing how right you are. And then the rest of the world's wrong, but I'm right. I'm the only one who knows how to read this stuff. Sorry, it's not going to fly. Again, share this with anybody you know that's been wrapped up in this stuff. There's a lot of you out there. I see it. I see it almost on a monthly basis now. And put the warning out. These trusts are a scam.